The lines between traditional finance and the crypto revolution are blurring faster than ever, and a single Japanese company is at the heart of it all. Metaplanet, a firm that has boldly transformed from a hotel operator into Asia's premier corporate Bitcoin investor, has just achieved a monumental milestone that cements its strategy in the mainstream financial world. But here's where it gets controversial. This move is funneling passive, institutional money directly into Bitcoin's volatile ecosystem, and not all investors may realize what they're signing up for. Let's break down exactly what happened and why it's such a big deal. In its latest semi-annual review concluded this past Friday, FTSE Russell, a global index powerhouse, announced that Metaplanet will be added to the FTSE Japan Index. This isn't just a simple listing, it's a major promotion. The company was upgraded from the small-cap category to mid-cap status, a significant vote of confidence from the traditional finance sector. This change is officially scheduled to take effect after the market closes on September 19, 2025. Following the announcement, Metaplanet's CEO, Simon Garovich, took to social media to call this an important milestone for the company's mission to remain Japan's leading Bitcoin treasury firm. And they didn't waste any time putting their strategy into action. The company immediately disclosed the purchase of an additional 103 Bitcoin, boosting their total holdings to a staggering 18,991 BTC. Now, here's a crucial detail that often gets missed. To fund this aggressive accumulation, Metaplanet also adjusted its capital structure. In the week of August 18th to 22nd, a whopping 49,000 stock acquisition rights were exercised. This created 4.9 million new shares, increasing the total number of shares in circulation to 722 million. While this provides fresh capital to buy more Bitcoin, it also means that each existing shareholder now owns a slightly smaller piece of the overall company. Adding an intriguing layer to the story is the involvement of Eric Trump. Appointed as a strategic advisor to Metaplanet back in March, he is reportedly set to attend the company's next shareholder meeting in Tokyo this September. His role and presence signal the growing and often debated intersection of high-profile political families and the cryptocurrency industry. So, what does this index inclusion actually mean in practice? The FTSE Japan Index is a major benchmark that tracks mid- and large-cap companies. More importantly, huge institutional funds, like pension funds and ETFs, that passively track this index are now obligated to automatically buy Metaplanet stock. Vincent Liu, Chief Investment Officer at Kronos Research, told Decrypt that this creates a regulated route for BTC exposures and could potentially pave the way for other crypto-forward companies to join major benchmarks. He suggests that these passive flows will channel institutional capital into Metaplanet, offering investors indirect exposure to Bitcoin and thereby boosting the company's liquidity and long-term stability. However, he also cautions that large price movements in Bitcoin could still ripple through both equity and crypto markets, linking their fates together. But here's the counterpoint, and it's a thought-provoking one. Is the system truly accepting crypto? Or is it just blind to it? Ryan Yoon, a senior analyst at Tiger Research, offers a critical perspective. He believes Metaplanet was evaluated using standard, neutral criteria like market capitalization and trading volume. Their massive Bitcoin holdings weren't a separate factor. This implies the inclusion represents the index's existing neutral framework, rather than an active endorsement of cryptocurrency strategies. Yoon points out a crucial limitation. While passive inflows are guaranteed, Metaplanet's small index weighting means the direct new demand for Bitcoin itself remains minimal. And this is the part that should give every investor pause. Yoon warns that people investing in a fund that tracks the FTSE Japan Index might believe they are making a diversified Japan equity investment, but in reality, they are taking on two new layers of risk: the volatility of Bitcoin's price and the execution capability of Metaplanet itself in acquiring it. The risk is set to intensify. Metaplanet is charging towards a publicly stated goal of holding 210,000 BTC, a target it is already 64% of the way toward reaching. Once achieved, the company's value will be overwhelmingly tied to the performance of Bitcoin. Yoon concludes that this could create unexpected volatility for passive investors who didn't anticipate such crypto exposure. This leads us to a controversial question for you, the reader. Is this a brilliant, forward-thinking strategy that legitimizes Bitcoin as a treasury asset? Or does it unfairly expose risk-averse passive investors to volatility they didn't explicitly choose? Should index providers start accounting for extreme asset concentration like this? Or is a neutral, criteria-based approach the only fair way? We want to hear your opinion. Do you agree with this strategy, or does it cross a line? Share your thoughts in the comments below.